Hello, trading has closed on March the 5th, 2024. We'll do our disclaimer, go over our calls, make some predictions. Well, this is my trading plan for Wednesday, which is March the 6th, 2024. Any trade you make should be made at your own risk. I do my best, but my calls can be wrong. Look for the pattern with the early low, which is this. There's an early low, a late high, and a drop in the middle of the day. That played out. It's normally a positive pattern. When it isn't positive, should lead to lower prices even if we don't close lower. Gets invalidated if we gap and overtake that day's high. That's pretty unlikely. But that conflicts with the fact that we gap down, hit lower lows, and this close, the dotted black line here, was over all these lows here. So this big drop didn't accomplish anything. It didn't take out these lows on a closing basis. Now that can all change at the open tomorrow. I mean, if we gap down under this low, then this doesn't count, and that's possible. That's a wall into the close. Those often gap down. But for right now, that's a positive pattern, calls for higher prices. And since that's a conflict with the previous pattern, we have to use the rules we have for mixed signals. Now, we also had some lower targets that were generated from Friday's rally. It looked like a good rally. MEJT said all the way up it wasn't going to stick, and it didn't. So we have to cross these targets off the list, all within their preferred time frames. Just over 51.26, just over 51.05, just over 50.96. This is a reminder of what we said. Also looking for a short-term intermediate top in this area, but not a disaster. That's still what I think is going to happen. Well, during the day, MEJT gave a sell signal, and that's played out. Well, this green jobby here is a Fibonacci grid measured from this top to this low. And if you look at the Fibonacci targets, you'll see how there are direct hits at 23.6, 38.2, close at the 50, right on the mark at 61.8, and almost on the mark at 78.6. When these things happen, there's a good chance this initial move has played out. Doesn't mean you won't go lower. But as far as this drop is concerned, there's a good chance for tomorrow at least that low is going to hold. Well, this is my preferred wave count since the October low. And if it's the right count, when we finish black 1, we're in black 2, it should be a lot bigger than this. It shouldn't just take a few days. In all likelihood, if it is the right count, and I think it is, we'll probably consolidate for weeks and have a good chance of trading within the fourth wave of pressure degrees, so there's a good chance we'll see 4,800 before we're done, which isn't a disaster, but it's not the kind of time when I'd take a second mortgage on the house and buy all the stocks I could, even though I think we're going much higher. Well, this is just the last wave up, and we aren't even in that fourth wave of lesser degree yet, so this still has some time to play out. But again, that doesn't mean we can't go up tomorrow. Let's see what happens if this low holds. This isn't the only count here, but if you look at the wave I've called red B, you can have an ABC and wave black C of red B is equal to wave black A. So you have an ABC, C is equal to A, and there's at least at this point a valid count. It says red B is completed. Now, if that's the right count, wave red C could equal wave red A just under 5,077. That's 67.81. Now, of course, this makes a lot of assumptions. It assumes this high is going to hold. We don't know that yet. It assumes that A is going to equal to C. We don't know that yet. But if that happens, we can count this wave as complete and we'll have an inside day. We'll probably close little change, not guaranteed. But if we have an inside day after a big drop like this, Larry Williams' rule says the next day, which should be Thursday, is a rally day. So this gap could even fill, in my opinion. Doesn't mean those assumptions we made have to be true, but at least it's a game plan. And if this doesn't hold, or this doesn't hold, especially if this doesn't hold, we can change our plan. Don't have to risk money at this point. So here are the mixed signals rules I've developed. Wednesday's pattern has the early low regardless of where we open. Signals are mixed. It's positive we gapped down, hit a lower low, and closed over relative intraday lows. And if that's maintained at the open, should see higher prices print, which doesn't tell us where we close. What's not good is bearish. Today's normally bullish pattern wasn't bullish at all. There's a wall into the close. It's often panic purchasing by amateurs. It's often followed by gapping down the next day. And unless we gap and promptly overtake today's high, calls for lower prices tomorrow. But again, doesn't tell us where we close. We have a wave count and the Fibonacci grid, each of which are suggesting today's low will hold. Now, we don't know this, but I think there's a good chance today's low is going to hold tomorrow. There's a reasonable likelihood we have an inside day tomorrow, possibly closing little change, that's the next most common, followed by a good rally on Thursday. And if we undercut today's low, then we're not making an inside day, and that kills the idea. So we're looking for the pattern tomorrow with the early low. Haven't risked any money yet. We're going to see if this high holds. More importantly, we're going to see if this low holds. And if it holds, there's a good chance we close little change. And if that happens, I'm going to look for a big rally on Thursday. That doesn't mean this correction's done. I think it has a ways to go. There's just no law against backing and filling this big drop, which didn't follow through. It's a pattern with the early low, and that's today's call.